Let's dive into a multiple choice question here on our multi-jurisdictional tax issues. Got a lot of issues, don't we? And these issues just happen to be dealing with multi-jurisdictional tax. Starting off, well, we got a lot of information. I don't want to read that until we read the question, so let's do such that. What is the corporation's year one state apportionment ratio for state B? That's a great question. Let's take a look and read through what we've got. Well, let's see, corporation conducted all of its business activities in states A and B and generated $1 million of pre-tax income in year one. The tax rate is 10% in state A and 5% in state B. Both states apportion the taxable income of multi-state corporations by employing an equally weighted three-factor apportionment formula. Neither state allows a tax deduction for state corporate income taxes. At the end of year one, the corporation reported the following percentages for its activities in each state for the purposes of calculating the state apportionment factors. Here we go. We got payroll expense, sales, and net property value. These are great factors because, well, guess what? How much you conduct your activity and your business in a state will probably depend on your payroll, your individuals, your employees, sales, how much you generate in revenue, and then your net property value. If you got all your property in one state, well, that's going to affect it very much more so than having it in both states equally. What's our ratio here? Well, the state apportionment factor is used to determine the amount of corporate income tax that corporations must pay to a particular state. And in this case, we're worried about state B. What are we going to do here? Well, we're going to say that, and these presumably are equally weighted. There's nothing to say they're not. What we do is we say 75 plus 50 plus 25. I'm doing it out of order. It doesn't really matter what order you do it, right? 75 plus 25 plus 50. And we're doing a normal average here. We're not, I know we do a lot of weighted averages throughout this many of the exams, whether it's weighted average cost of capital or dealing with weighted average shares outstanding. But in this, it's just a normal weight. Now, this question could be a lot more difficult. It could have some sort of weighting and say that, okay, well, payroll expense has more weighting than sales, or net property value has more weight than sales. That's something that we could be dealing with, and that's not what we're dealing with here. But just keep in mind that is something you could see. Add these all together. That gets us 150. We divide that by 3. And what does that bring us to? That brings us to 50%. Now, I mean, you don't have to do that full math. You could look at this and say, okay, well, what's in between these two? It's 50. I mean, you could, any way that you have been able to calculate averages since elementary, middle, high school, whenever we learned that. I don't really remember when we learned that, but however you do it is fine. But that's it. That's about all you got to do there. It's a very hefty, hardy question. There's a lot going on, but at the end of the day, look at all it took to solve that. Perfect. Looking good. Don't fall for the tricks and distractions. Stay focused. You got this. Let's move on to the next one. Starting off here, in which of the following situations will a controlled foreign corporation located in Ireland be deemed to have subpart F income? Let's just go through each particular answer and see what we want. Services are provided by an English company, an Irish company in England, under a contract entered into by its U.S. parent. What are our thoughts with that? I'll give you a second to think about it. Well, in this case, let's just think about what subpart F income is dealing with. Well, that generally is derived from the activities of a controlled foreign corporation that generates income from outside its country of incorporation. In this case, the Irish company is providing services in England under a contract entered into by its U.S. parent. So these services are being performed outside its country of incorporation, and this would result in subpart F income. As simple as that, right? As simple as that. Is that simple? I don't think so. But yeah, that's what we'd be looking at. But let's read through the others. Services are performed in Ireland by the Irish company under a contract entered into by its U.S. parent. Give you a second to think about that one. I mean, obviously, we kind of agreed that letter A looks. I don't know if you agreed with me. Maybe you don't agree with me, but kind of going with letter A. But think about this one for a second. Well, in this situation, the services are being performed within the company of incorporation, which is Ireland. So the services would not generate subpart F income. All right. Look into the next one. Letter C. Property is produced in Ireland by the Irish company and sold outside its country of incorporation. Give me a second to think about that. Well, while the situation does involve the Irish company selling property outside of the country of incorporation, it does not necessarily result in subpart F income. If the property is produced by the controlled foreign corporation itself, this income might be excluded from the subpart F income provisions. We're not going to go with letter C. And lastly, letter D here. Property is brought from the controlled foreign corporation's U.S. parent and is sold by an Irish company for use in an Irish manufacturing plant. Well, even though the property is being sold by the Irish company, the use of that property within the same country of the controlled foreign corporation would not result in subpart F income, leaving us with simply letter A, as we discussed. That's about all I got for you today with these questions. Hope you're having a great day. Hope you're powering through, having a good time. This is a lot of material. It's a lot, but keep it up. You got this. We'll get through it together.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.